Okay, let's kick things off. Did you know that something like 98% of people who try trading, they actually end up losing money?
It's a pretty shocking statistic, yeah.
It really is. And it seems to boil down to a few core things, like not knowing what you should be trading, or maybe how to use a trading robot, or even just setting one up properly.
That's right. Those are the big hurdles.
So the big question we want to tackle in this deep dive is, how can AI possibly help turn those stats around? For the average person.
Well, that's the interesting part.
We're going to explore how these AI tools and virtual trading platforms can maybe offer a shortcut, help you develop and test crypto strategies without risking any real cash up front.
Exactly. What's fascinating is how AI can directly address those common problems in trading. It gives you a structured approach, where maybe human emotion or just guesswork often leads people astray.
Right. Less guesswork, more data.
Precisely. Instead of just kind of winging it, AI can genuinely guide you on what tokens might be good, how you can build a strategy, and crucially, how to actually set up the bots.
So it fills in those knowledge gaps.
Yeah, it helps move beyond those fundamental gaps that cause so many people to fail.
Okay, turning statistics around with AI, that sounds great. But I imagine someone listening might think, okay, this sounds complicated, sounds expensive. Do I need to be some tech wizard?
Not necessarily, and that's really the beauty of what we're seeing in the source material.
Oh.
It details a pretty simple toolkit, actually. It's accessible, and you don't need a huge pile of money to just get started experimenting.
Okay, so what are we talking about tool-wise?
Well, first, you need an AI tool.
Yeah.
Something like ChatGPT is perfect, and it's free to use.
Right, most people have access to that.
Then, and this is really key, you need a virtual trading platform for testing. Like, a free Jonny Blockchain account lets you do paper trading. No real money involved.
Okay, so you can try things out safely.
Exactly. Risk-free testing. And finally, you need some market data. A source like cryptobubble.net was mentioned. Pretty straightforward for getting market info.
Got it.
So the main point is you can set all this up for initial testing, without spending a dime.
Okay, tools are one thing. But I guess the real magic, maybe the tricky part, is knowing what to ask the AI, right? How do you get useful trading ideas out of it? How important is that prompt?
Oh, it's absolutely critical, crucial.
Yeah.
The more information, the more context you give the AI, the better it's going to perform. You'll get much more relevant results.
That makes sense.
So the source material actually gives a really good example, a specific prompt.
Okay, walk us through it.
So the user's goal was clear. Set up a trading robot on Jonny Blockchain. They had 600 virtual dollars to work with, and they picked 4 possible tokens: Bitcoin, Ethereum, XRP, or Solana.
Okay, specific goal, specific coins.
Right. And the request to the AI was find the best token out of those 4 for making a profit over the next 90 days.
Okay. But they didn't just ask which coin, did they?
No, they got much more specific. They asked for parameters for the bot itself.
Like what?
Like, for the first buy, they call it lot 0, should the bot buy immediately or wait for the price to dip, say?
Okay, entry point.
Exactly. And then if the price did drop after that first buy, what percentage drop should trigger the next buy, lot 1, and then again for lot 2 if it kept falling?
So defining the buying strategy as the price goes down.
Precisely. Plus, they asked for the best percentage trigger for taking profit.
Right, when to sell.
And critically, they didn't just ask this in a vacuum. They fed the AI actual data.
What kind of data?
The 90-day price movement for each of those 4 specific tokens. They got that from cryptobubble.net.
So real historical price action.
Exactly. That's the comprehensive input you need for the AI to give you something genuinely useful back.
Here's where it gets really interesting. It's all about how you frame the question, how you feed it the right stuff to get the insights you need.
And if we connect this to the bigger picture, you see the AI isn't just spitting out a random pick.
Yeah.
It's giving a recommendation with a rationale. It's reflecting, complex market dynamics based on the data it was given.
So what did it say about the coins?
Well, after processing that prompt and the data, it gave a summary for each. For Bitcoin, it said, great long-term hold, but maybe less volatile right now for quick profits with things like grid or spot bots.
Okay. What are those, again, quickly? Grid and spot bots.
Right, they're automated strategies. Grid bots place lots of buy and sell orders in a range to catch small price moves. Spot bots usually work with simpler buy-sell logic based on signals.
Gotcha. So Bitcoin, maybe not ideal for those bots right now. What about Ethereum?
Ethereum, it noted, had strong recent performance. It actually suggested it was much better to trade with than Bitcoin for this purpose.
Interesting.
It also looked at XRP and Solana, gave insights there too.
But the top pick was Ethereum.
Yes, the AI's best pick was Ethereum. And the reasons were pretty clear. High recent movement, good liquidity, meaning easy to buy and sell. That makes it ideal for those grid or spot bots because they thrive on that volatility.
Makes sense.
And it even gave a bonus insight. It mentioned Ethereum often leads altcoin season.
Ah, right, when money flows from Bitcoin into other coins.
Exactly. So Ethereum's movement can kind of predict or influence others. And importantly, it wasn't just pick Ethereum. The AI gave specific settings.
For take profit and entry.
Yeah, based on its analysis. So you get actionable steps, not just a vague suggestion.
Okay, so the AI gives its recommendation, its settings. Now what? You jump into real trading.
Well, not quite. This is where the virtual testing, the paper trading becomes so important. Theory needs practice, right?
Right.
The next step described was taking those exact AI-generated settings and plugging them into Jonny Blockchain's virtual environment.
Testing it out risk-free.
Precisely. And the way they did it was clever. They duplicated the virtual trading tab 4 times.
To run multiple tests at once.
Yeah, testing different scenarios simultaneously. Each test used that initial $200 lot size, and they set a 4% take-profit trigger.
Okay.
Which, interestingly, the source creator mentioned they thought was surprisingly high. Usually, they'd lean towards a lower take-profit percentage.
Huh. So the AI recommended higher than expected. Let's hear the results. This is the exciting part.
It really was eye-opening.
Okay.
So test 1, this was on a centralized exchange, Binance, using the setting, attempt to sell all lots at the average price.
Yeah, what does that mean exactly?
It means the bot waits, it holds all the buys it made as the price dropped, and only sells when the price recovers enough to sell everything together at a profit based on the average buy-in price.
Got it. One bigger profitable trade.
Yeah.
And the result.
Profit, $7,745.
Wow. On a $600 initial setup. That's virtual money, but still.
Incredible virtual profit, yeah. Okay, test 2. Also on Binance, but using a different setting. Use the kept profits to sell the most recent lot. This tries to lock in smaller profits more often. It sells just the last bit it bought as soon as that specific bit is in profit, rather than waiting for the whole position.
Okay, smaller, more frequent gains, maybe. The result.
Profit, $90.78.
Whoa, okay, that's drastically different. $7,700 versus $90.
A massive difference, yeah. Same coin, same exchange, just that one setting change.
Okay, what about the decentralized tests?
Right. Test 3 was on a decentralized exchange using the base blockchain. It used the first setting again. Attempt to sell all lots at the average price.
The profit there.
Profit, $6,156.
Still very impressive.
Yeah.
Lower than Binance Test 1, but much higher than Binance Test 2.
Exactly. And finally, test 4, also on the base blockchain, but using the second setting, keep profits for the last lot.
Okay, let me guess. Much lower.
Actually, no. The profit was identical, $6,156.
Huh. So on the decentralized exchange, that specific setting didn't seem to matter much, unlike on Binance.
That's what the results showed, yes. Both DX strategies yielded the same profit.
So the obvious takeaway seems to be centralized exchanges like Binance performed way faster, made significantly more profit in these tests. Why is that?
Yeah, that was the key difference observed. It really boils down to how these exchanges operate fundamentally.
Tell me more.
On centralized exchanges, your trades are usually happening off the actual blockchain. They're like internal ledger updates within the exchange's system.
Yeah.
Super fast, almost instant.
So no waiting for blockchain confirmations.
Exactly. No blockchain transaction times, usually no separate gas fees for each little trade the bot makes. You're trading quickly within their walled garden, essentially.
Okay.
The trade-off, of course, is you're trusting the exchange with your funds. They hold your crypto.
Right, not your keys, not your coins.
Precisely. Whereas with decentralized exchanges, like the ones on Base, you maintain self-custody. The funds stay in your wallet.
Which many people prefer for security.
Definitely. But the trade-off there is that each trade, or at least interactions with the smart contract, does happen on the blockchain, so it takes longer, and there can be network fees associated with those transactions.
Which might slow down the bot or eat into smaller profits, especially for high-frequency strategies.
That's the idea. The speed and cost difference can really impact strategies like these grid bots, as the simulations seem to show.
That makes perfect sense. Okay, so let's bring it back. What does this all mean for you, the listener, who's maybe thinking about trying this?
Well, the winning strategy, purely based on these simulations, was clearly that Binance bought using the sell all lots at average price setting.
The $745 one.
Yep. That generated the most impressive virtual profit. And it's interesting that on the DX side, the profit setting didn't make a difference, suggesting maybe the environment itself, the transaction speeds and costs were the bigger factor there.
Okay, impressive virtual profit. But let's be real. How likely is it that someone gets exactly $745 if they run this with real money? Real markets have hiccups, right? Slippage, sudden news.
That's an absolutely crucial point. Paper trading is fantastic for testing logic, for understanding potential, risk-free. But yes, the real world throws curveballs, like slippage, where the price you actually get filled at is slightly different from what you expected. Network congestion can delay trades, especially on DXs, and suddenly, wild market swings can blow any strategy out of the water temporarily.
So manage expectations.
Absolutely. But once you have these settings that performed well in extensive virtual testing, the next logical step is the ability to apply them to a real trading bot with real money.
Okay.
But, and this is the big disclaimer, always, always do your own due diligence. Never trade with money you can't afford to lose.
Responsible trading 101.
It has to be emphasized. This is powerful stuff, but it needs to be applied responsibly.
Right. And this brings us back to platforms like Jonny Blockchain. The value seems to be that you don't need to be a coder, right?
Correct. No coding needed, no deep prior experience required to set up these bots using the interface.
So your funds stay in your own exchange account or wallet.
Yes, the platform connects to your exchange or wallet via API keys, but it doesn't hold your funds itself. You remain in control. Plus, it runs 247 automatically.
And the cost you mentioned.
The source mentioned it was very affordable, something like $25 a year for unlimited bot setups.
Wow, that is accessible.
So really, this whole deep dive, I think, shows how AI can take something complex like trading strategical development and really simplify it.
Yeah, making it more accessible.
Turning what used to be maybe just for pros or quants into a tool that many more people can potentially use.
It's fascinating. So thinking bigger picture now. Given this power of AI to crunch data, find patterns, predict optimal settings, how do you think this might fundamentally change how we as individuals approach building financial strategies, not just crypto, maybe broader?
That's a huge question.
And what are the implications for, say, financial literacy and just opportunity, especially as these AI tools get even smarter, even more integrated into platforms? Where does this take us?